Good day. This is the Elliott Wave weekly update for the S&P 500, being recorded on Saturday, September the 21st, 2024. It was a productive week. We got the rate cut, the long-awaited rate cut. It actually came in, I think, pretty much square in the middle. Right, the chances of 25 basis points was pretty much guaranteed, with 50 basis points having a fairly heavy hand in likely becoming possible. The initial reaction from the market was one of some glee, but then again, we closed a little bit lower. And it wasn't until the next day that we got that rebound and more of a heartfelt pop out of that rate cut. Now, what does it really mean towards the wave counts that I'm using for the S&P 500? I'm starting here in the cash market, and the count that I'm showing continues to allow for some upside, but it is the count that basically that minor fourth wave, which is the orange colored, so this is all part of that minor fourth wave, even with the new highs, that the minor fourth wave is still in progress or still underway. And so what we're really working through again is the B wave. And the fact that we've now gone above the minor third high, we're already into a what would be considered regular B wave territory. Now, are there things that could possibly turn this market on its ear and start heading lower? In fact, like gapping lower. And my first reaction is, yeah, I believe that there are. How much or how severe the markets intend to allow an algorithm to produce that type of a move? That's really what I question, because I think that algorithms are more functional and coming in as algorithms in the market, buying and selling, when it comes to risk on, risk off. So is there some type of a situation that could just cause some selling? And there is yes. The answer is still yes. And that then could trigger the algorithms into risk off trading. So in that respect, I think the two combinations of how I'm measuring volatility and strength in the market or weakness in the market, as it's based on levels of the options flow and also just the flows, as I call them. Now, with that in mind, off of the July 16th high, I believe it was July 16th, it was right up in there. Yes, it was July 16th. The S&P made a high at 5669.67. I'm going to round it up, as bold as I am, to 5670. Now, from that level, we started to put in the minor fourth wave. We reached a low in August, on August the 5th. So, and it was an ABC down. But at the time, and still right now, it's only labeling as the minute wave A of this larger minor four. So what we're still within is a minute B wave. That would leave a minute C wave down. Now we're going to take a look to see what are the probabilities that we may be finished. Okay, so if this is a C wave, and we're now moving into irregular type positioning, could the market be done at this 0.618? Because it went up, it met it. That high was actually 33. And the resistance at 33.50, and this was the high that day Friday was 33.57. So basically it hit it and finished just a little bit below it. Now, what are the most common? If we're looking at an ABC structure, the relationship is between the C wave and the A wave. Well, here's our A wave. So what's the first thing that we look for in the C wave? Is equality. That is 100%, 59.34. Okay, let's bear that in mind. What is number two? Number two is 1.618, which is way up here. I do not think that that's what's going to happen right now in a C wave. And then what is the third most common? 0.618. It came up and hit it on the nose. So what also we then look at is the structure itself. Structure itself still is five waves. It could be the C wave. And what that would suggest is that from this level, we turn and we gap lower. So in other words, because we have tomorrow, the futures open tomorrow, they have trade all afternoon, evening, and then all overnight until we get ready for the next morning, and that is when the stocks will open in New York. So our regular session still has quite a bit of time for the markets to trade. What geopolitically could possibly just upend all of this? And it really now swarms right around Israel, Hamas, all of the problems that are coming in there from the various factions that supposedly are backed by who. And I don't want to be geopolitical, but there is a geopolitical situation there, and there's another one up in the Ukraine. And so both get barbs and threats thrown from all sides. Could that upend the market? Yeah, I mean, it could be real quick as well. So everything fits because I would be expected to turn it to really come down, and then the market gets to make an adjustment as to what severity really needs. Is there going to be a serious disruption due to something going on geopolitically? And then what else could it cause it? So that would all to be seen. But yes, the market could get upended. And in terms of coming down in a C wave, absolutely. In terms of that B wave being finished, possible. Because we've met one of the conditions with that C wave. It has to break above and break it to a new high. It did. So it keeps that irregular, but it hit at 618 right there instead of going full bore or even getting up into what would be considered irregular territory. But we've seen this before where the market will go up, not necessarily break to that level, but get within spitting distance of it, so to speak. And really from here, it was $60 more up. Fair enough, a good rally day. And we may still do that. So in other words, we can come in on Monday and we're gapping to the other side. We're gapping up and we get up to 5,800, let's say. And we meet that first one that still could finish the C wave. And then, but I'd be looking for a little bit higher because I'm going to be saying this is 1, then we have a 2, then we have a 3, 4, and a 5. And so I still think we could end up here and still call it C wave, but I'm talking like 5,879. I'm not talking like we start pushing up towards 6,000. No. Then I believe it's the other count, which I'll show in the futures market. Okay. So those remain alive. This remains alive. The political situation remains alive. I have no idea. So in other words, it's like I'm not saying that that's what's going to happen, but we have to realize, what if it does? What could it be? Well, my first suggestion is it's going to be a C wave, and we're going to finish a minor 4. If it's anything more serious, then we'll go back and we'll take a look at how everything is being. Because, yeah, can I say that nothing serious enough could happen if this thing just absolutely tumbles right out of bed? I can't. And if anybody says that they can, okay, fine. Your crystal ball is better than mine. All right, I'll give you that. But this is what I see as a possibility, and should it occur, the market, I believe, could drop in a C wave. And again, that C wave can take us all the way back to 49.58 down to 47.39. Those are the fibs for the minor 4. And no matter where it got to, we'd be looking at 1.618 coming down. And we've run that exercise before. I did it last week, where I went down and went up to there to show this what we could do. And I'll run it again right now. There's going to be a very confused chart, but let's just go ahead and put that in, and then I'll show you what that looks like. So even if it just came up there, if we're going to drop from here, where we go, 1.618 is 48.41, right in between 38.2 and 50%. Totally acceptable, totally within the realm of all reality under Fib and Elliott. So is it possible? Sure, I'm showing it to you. There are the numbers. If these numbers are it, then those numbers fit. So, but if we continue to rally, I will show you the other two that it still can go up to this level. Well, oops, get rid of that. Here you have it again, just under the 382. If it goes all the way up to that top level, then we're going to find that it likely, no, dang it. Then we're going to find that it likely just goes right to that 382 level. Look at that, just above the 382, but to a new low. So we can go all the way up to almost 5,900, turn and come all the way back down to 49.88 and then go all the way back up. That's out there, folks. It's still alive. Is that what I'm thinking? Well, if I go over to the futures market, you're going to see that I'm basically trading it as if we're just going to continue to move higher, that we're already in. So in the futures market, I'm covering it as if this low is minor wave 4. And now on both, we're moving up to new highs. So sure, it makes sense. It's okay. But should something occur and we flip in between there and these levels, well, yeah, then we keep it alive. Above this level is going to be pretty convincing that we're heading towards 59 to 6,000, 5,900, 6,000 to complete minor wave 5 and then intermediate wave 3. And we even have a little bit higher numbers above that. So we have 59 and then we have 63. That's the intermediate third. So they're out there. Now it's all up to structure. That's why I'm giving you both sides, and we're looking very intensely at structure. And that's how I determine what I'm going to put together and what I'm going to say here. These are the best objectives that I have, or the best things that I think that, or the two most popular in my own head of what I think the market can and cannot do. And one's up and one's down. And how am I going to trade it? I'll tell you, what's ever in front of me, that's how I'm going to trade. When people say, well, I find it very difficult, how do you make money? I say, well, I'm a day trader, number one. So I'm giving you both sides, and I will take whichever one it decides to do. And because I'm an intraday trader, I'm not trading on a 4-hour chart. I'm not trading on a long-term basis that I have to hold a long, or a short-term basis that I have to hold a short. And if I did, they would be hedged and managed positions. So again, to the naysayers that said this is too confusing, I don't see how you could possibly make money. I want to tell you, it's not that difficult. And more on that at some other point. But it is not that difficult, and to make between $500 and $2,000 a day. Depends on your level of trading and your skill and your knowledge and your ability to move in and out of the market. The moves are there. Trust me, the moves are there. If you're afraid of them, then you just need to get used to them. But the moves are there intraday. All I need to do, folks, I'm going to bring it down. Let's take it just to the 5-minute chart. There's a 5-minute chart. These moves are every day, are all within 5 minutes. So this one started right at that level. So this opened at 57.05. The high was 57.15. That's 15 S&P dollars. 15 S&P dollars. And the SPX, that's big money. Right? The S&P 500, big money. This is the big daddy index. And in the SPX, in the S&P, in the ES, it's $12.50 a tick, $50 a point, $15. It's a big trade. Even if you only got $10 of it, even if you only got $5 of it, it's still a damn good trade. And you get opportunity to do them many times. That was to the buy side. That was a good buy side. That was a good sell side, good sell side, good sell side. That's just trading off a 5-minute chart. So the moves are there. So you can make the money. Now, position trading, of course, you've got a lot more concerns. How long do I stay long? Because that's the general thought about how people trade. I'm trying to bring to you, it's like, well, you can think differently. How are you trading every day? If you're trading every day, then I think you really have to stay more open to being able to get in and trade the individual moves. And that's my point, and that's what I'm trying to show, really, when I'm giving this analysis. So I'm gearing it towards active traders who have the ability to move in and out of the market and know what side they're taking, and doesn't make any difference. And not saying, well, I got to be bullish or I got to be bearish. That's what you're looking for. But if you get in there, and we get in there on Monday and they start slamming the market, well, I better be more prepared and be able to trade it. And that's why I'm showing you, there's a potential that it could do that. And here's why. It's met criteria that could finish a B wave and turn the market lower. And then I show you, here's what possibly could tip that scale. What's going to tip the human emotion to get it to do it? They got to start pushing that sell button, and there's a loading up sells inside of an algorithm that will just go out and do it. So still the human emotional factor remains in place, folks. It's just how it's going to get translated of what that algorithm should do. So that's what's going to happen. All right. I'm going to go over to now, as far as, let me just go over the moving averages here they're actually looking pretty good for a continuation to the upside. Now, that's the other factor that I mentioned, but then I went off on a tangent there. Coming back off of that tangent, if we continue to see upside, this particular count as labeled would be invalidated. But you see how high we have to get. So it gets to stay alive for a little bit longer here, about another 150 points or so, before it gets totally wiped out. And then we will be going to 6,000 to 62 or 6,300. Now, so 13, 20, 50, 200. This is the 4 hour. On the daily, it might look just slightly different. 4 hours looking pretty good, if you ask me. Actually, so is this one. See the distance that the S&P is getting between the moving averages is showing that the strength is there. Now, we're paying attention here as well because this starts to say, it waned a little bit, but we're going to be moving up into overbought on a daily chart and be looking for a correction. So we might be in it right now. So if we're in, we still might be in a wave 2, which could bring us down. Could bring us into lower levels, the 1-2 coming down. This one, let me go back to that 4 hour chart and bring this down because this I need to take off because it's interfering. Oh, well, I don't think I did that right. Okay, so there's upside basically. If we break there, then we got there. And the downside is it's all there. But moving average wise, I'm looking at it's going to break in there. We will get beyond. Now I actually took down to both the fibs for the irregular. All the irregular stuff I've taken down. Let me go over to the S&P, to the ES, and I'll talk about the other side. So the other side of this entire story, any of the geopolitical stuff, no, that remains. So here's wave 4. Let me go first. Let me start from the daily. I think that might work out better because there's the 4. So we're going to open it up right there. 3, bing. Minor 3, minor 4, ABC. So this one suggests that we are in minor wave 5, and it's going to be a 5 wave up, of which we've just finished wave 1, minute, and wave 2, minute. So we're in minute wave 3, and pretty good. I like the way that kind of blasted off. So I think I have moved up where before I had put it the 3 and the 4. Excuse me, I put the larger 3. I put 1 and 2 here, and this was 1 of 3. So I put this minute 3, 4 here, and this was the next level up, so the minuet wave 3. I've now changed that. They're not done, so we're still in that minuet wave 2 pullback off of the first 5 up within minute wave 3. So we're starting to get that lift off, and we started to get it pretty strongly. And now if we correct and we hold, so wave 2 has potential. It can go 50, it can go 618, but those aren't that severe. Getting down to 50 is going to seem like, okay, we're dropping down nearly 100. What's up? It could be nothing more than just a wave 2. And again, I'm going to put this back into that geopolitical situation. There is nothing concrete to tell us that the world's going to fall apart according that this is going to turn into World War III starting sometime tomorrow or Monday. Nothing is really out there. All we know is that there's increased tension in that region, and that we're going to be expecting something to happen because Israel's now gone in and did some damage in the city of Beirut, and it's not going to be acceptable. If I live there, it's not acceptable. You just come in because you're at war with this group, and so this has happened to be where they are. There are a lot of innocent people, so it's going to start an uproar. So whatever the situation is, I don't state anything, but should it escalate, it could kick the market lower, but it's going to be a quick until more information is kind of known. Is it going to escalate further? Right now, I think it's just barbs. So we'll see what happens. We still have all today, tonight, tomorrow. So we will see. But the potential for we have a wave two. Could we come down to 55.83? Sure. We're at 57.58. Coming down to that would be a big drop. That would be a big drop, and everybody go rejection. And guess what? Under the other count that I just gave over in the cash market, it could be rejection in the form of a C wave down. But right now, even in a wave two, we can get a nice little plop, a little gap, reverse, and head back higher. So we get a wave two, and then we're off to the races in a wave three. Wave three has already 59, almost 6,000 for a minute third wave. So we're already looking for the intermediate third wave to finish somewhere around 62. What's going to drive it? Well, after we get through the next week, a week from Monday is the last trading day for September. So then we got the quarterlies. It's going to release a whole bunch of new stuff in terms of gamma, volatility, etc. So we work from event to event. But as long as we're releasing and still coming back up with risk on type trading, which if the market continues to go up, that's what will be in play. They'll continue to put the risk on until we get something that shakes it and tells it no. And then we'll see all the risk off type trading. So that's been the cycle. So that's all actually, that's what I try to measure and trade to. So I'm following what's happening in the, in the material that Spot Gamma puts out. I'm going to say it again, Spot Gamma. And, the information is very tailored towards if you understand what the options flow is producing and what those levels mean when such option positions need to be changed or adjusted or attended to. That's the whole game. And when those bigger levels fail or break, and we get a switch from putting risk on to putting risk off, well, you're going to get some intensified selling, just like we see intensified buying on the risk on. All right, enough said. So let's go back here and just kind of go over some levels. And we got a wave two coming in. Great, no problem. Here we have our levels 57.15. 56.65, 56.24, and 55.83, and that would take us from 0.236 down to 0.618. It should come down in an ABC. Wave two should form an ABC. So, and it could be a flat, and it could be a zigzag. Most of the time, wave two, you get a little bit more like a zigzag versus a flat. By wave four, it's just correcting wave three, and everybody's got still, if it's to the upside, they're still pretty bullish. So they're not looking for a deeper four. We get them, but not necessarily looking for them. All right, so that's kind of the story here now. Let me go out to the daily here as well. These are not looking that bad. A little bit of the distance. Let me put it up here a little bit so we can see it, not squish it together. See, I like seeing that distance between there and there. This is closer, but the 20 I like because it's showing the strength to the upside. To me, reading. Now, RSI, well, we had a little bit of a down day, so we get a little bit of a reaction, and it could react even more. I think that's healthy for the market because if we build up too much steam, then we're going to be looking for you're going to get a harder correction. Here, it's just kind of like letting some of the air out of the balloon, and then you replace it. Some of the air, and then we replace the balloon, it starts to go up again. Replace that helium so that it can rise. So here we are. Here's where I think we could go. And again, I'm going to tell you, this is more of the count that I favor because in the futures market, I think that's when the options are trading more to that side, from what I can tell. And so, like the last week, the gaps higher came to the upside, which shifted it from, back to risk on. So a lot of then adjusting and re-entering and doing things in that nature. And then we had expiration, which had a lot to say. And in between, we did see rotation, a lot of rotation where highs seemed to have been reached in Apple, et cetera. And then that got twisted around a little bit because we had this expiration on Friday for Apple, which really pointed to they needed to get it up to 230 first to monetize and get ready and then let it sink. Then bring it down. Now we're all done with the 230s. So bring it back down towards 225. Kind of what happened. All right. Now, that's about it. I don't want to keep going on here. Again, next week on economic data wise, we have purchasing managers indexes coming out at the beginning of the week, S&P. So that's both the services and manufacturing come out, I believe, on Monday, if not Tuesday. And we have a lot of all the Fed governors at one point, presidents, governors are all out there talking next week. So the big days I think are going to be Tuesday and Friday. Friday's PCE. And in between, we have some GDP revisions coming out and all the other stuff that could affect the market. But the big ones, I believe, are going to be the PMIs and then the PCE on Friday. All right, so the next daily Elliott Wave update will be on Monday, the 23rd.